the first company presenting today is CyanConnode. This provides investors with the chance to invest in smart technologies and smart meters and the communications web associated with them. Smart meter rollout is becoming a priority around the world for fairly obvious reasons. For example, in India, there are plans to replace 250 million old meters in the next few years. CyanConnode recently completed a fundraising to support their growth, and the DCF valuations are well above the current share price. We've got two speakers today. We've got John Cronin, who's the executive chairman, and we've got Heather Peacock, who's the CFO. John, over to you.
Thank you, Keith, and a warm welcome to everybody that's on this call. I do appreciate you giving the time today. So without further ado, if we just go through the presentation. So on to the next slide, please. And the next, yeah. No forward-looking statements, as you can all appreciate. We could spend all our time reading that statement, but I think you're all used to that. So let me just kick off and talk about really the investment case and why should you look to invest in CyanConnode, and why would you want to continue investing in CyanConnode? First of all, we're headquartered in Cambridge in the UK, where we've got some very intelligent people, the clever clogs of the business, the PhDs, that really have designed the software, the hardware, and the services for our product. We have spent something like over the last 10, 12 years, something like $50 million on the product, and the product is fully baked, as I would say. There's some integration and small add-ons that we'll do as we move forward. And we go to market through multi-billion-dollar companies and organizations such as Schneider, Genus, IntelliSmart, Adani, Reliance, for instance. And we offer a full end-to-end solution, which is really important in delivering a quality product. Our focus today is on electricity smart metering, and we operate and look at businesses in the UK, in India, Sweden, Thailand, some African countries, and the UAE, in particular Dubai, and also Abu Dhabi. And we can, do and offer gas, water, EV chargers, smart cities, but we're so busy with electricity at the moment. That's the real focus as a here and now and the short-term revenue streams for us. So as Keith has mentioned, in India alone, by 2025, the vision for the Indian government is to roll out 250 million smart meters. Today, there is only 4 million smart meters that's been deployed, of which CyanConnode today has between 22 and 25% of that market. The rest of the 75%, circa, is actually from a government organization called ESL and IntelliSmart, and they were given under a nominations basis, government to government. In other words, they didn't have to tender for that. They were given those to roll out the smart metering, albeit on cellular. And of course, what you have to do is have a performance level of 99.5% of getting the data from point A to point B. And that's what we offer an RF mesh. Cellular offers something between 95 to 97%, so it doesn't quite hit the mark in terms of what it is that the government look for. If you look at the market as a total, it's about $80 a point. That includes the communications, includes the meter billing software, and includes the meter itself. End-to-end point, about $80 a point, and that's a market worth of about $20 billion. So it's a huge market that's out there, and really there's still 250 million to go at. And all of this requires significant investment, and this is being done now by companies coming in to set up special purpose vehicles where they fund it, and actually the utility then, instead of paying $80, will pay per meter per month over 8 or 10 years. And that's quite significant. If you then strip back and say, what's it worth to us as CyanConnode, I predict in the next 5 years, conservatively 20 to 30 smart meters of the communications, and that's worth to us around about $400 to $600 million, depending on the deal that we can do as we move forward. Excitingly, today there's actually 41 million of those 250 out there up for grabs under tenders at different stages. Up until this year, we were only talking about hundreds of thousands of units, not millions of units. So you can see the inflection point that we've had. 775 million in revenue is that opportunity. And I'm not saying, by the way, we're going to win all of that, but if we can win some of the crumbs off the giant's table, we'll be delighted with that. Worldwide, we've got an opportunity pipeline at 840 million. And as I mentioned, those countries earlier on that we operate in. So this next piece, the USP as we call it, why do utilities, Discom want CyanConnode? Well, first of all, we're an international standards-based product. As I mentioned, delivering 99.5% performance. And basically, we're a very secure network. So I'll give you an example of that. When you come out of a football match, rugby match, cricket, try and use a mobile phone. At times, that tower where you're trying to make the phone, that cell, is blocked. You can't take all the phone calls. We dimension the network to be able to take 100% data throughput all of the time. We're also meter agnostic. We can connect any device in the world in the neighborhood network. What we have done in the last year or so as well is move primarily not just 100% RF, but we can offer some cellular, NB-IoT, and power line communications through our platform. And we're always looking at innovation like long distance radio to go up to sort of 10 kilometers instead of the 4 kilometers. And worldwide, we've deployed something like 2.7 million units to date. Next slide, please. So, what's really this point is saying to us is that, it is a platform, and that platform can take any device, can take EV chargers, smart lighting, gas and water as well, and that we are and do have blue chip partners that go to market. Next one, please. So just to give, for those people who don't know CyanConnode, I'm sure there's a lot on here that are very familiar with us. On the left-hand side, those are the meters in the homes, and we connect 250 different homes to one data concentrator unit that's in the middle there. So 250 to one data concentrator unit, and we backhaul that then over mobile or fiber. We then provide some software called head-end software in the billing system of the utility. And from the hardware, the software, and the services that we offer, it's a full end-to-end solution. And we do all the integration from the meter and integrate into the meter data management system, the billing system. And therefore, we can actually look at rows and rows of meters in call centers. We can control them, offering time of day tariffs. We can do net. A lot of people have got solar panels, and those panels will actually deliver into the grid, and we can net that off the bills. People that don't pay the bills, we can remotely switch them off and then get them to pay onto prepaid metering. And actually then we can make sure that the utility collects the cash. I mean, today they lose something like $32 billion a year where they've generated electricity and not collected that cash. Our system helps collect that cash, also helps for non-payers. Actually, one utility, we've just seen the results where they were collecting cash of 63% a month. With our system in 2 months, went to 88%. So helps cash collection as well. The next slide, please. Here it looks at, why are we cost competitive? Well, we're cost competitive because we use unlicensed spectrum, and this is called ISM bands. This is the same bandwidth that actually, if you've got a key fob that opens up a garage door or electric gates, that's what we use as the ISM band, and that is globally around the world and what we call sub-gigahertz. And we don't pay for that. As you know, mobile companies, cellular companies, pay for that spectrum for that usage to the government. It's very reliable, low power. It's less than a mobile phone in terms of power. And actually, we've got self-forming, self-healing. So what happens, we are a mesh like a spider's web. If one route went down, it looks for an alternative route to carry the data. That's why we can offer 99.5%. Unlike cellular is point to point. So if that signal goes down, that cuts off that data flow. But our one, as I say, is self-forming, self-healing. Next one, please. So this slide here, we're more and more getting additional partners. So On the top of this slide, these are the end customers. These are the customers using the solutions and paying for that solution. So companies like Tata Power, you may have heard of, Adani, Reliance, just to name but some. Then in the middle and underneath are the companies that we go to market with. So we either go through a meter manufacturer to the likes of Tata Power, Reliance, or we go through a system integrator, like for instance IntelliSmart, or we go through mobile operator like Telefonica, or we go through what we're now seeing is EPCs, engineering, procurement, construction companies. These are companies with deep pockets who build infrastructure like motorways, airports. Give an example on here, the companies like Alphanar, companies like NCC, companies like Monte Carlo, Hindustan Power. These are all new companies that have come out of the woodwork, now realizing the opportunities they can see in the marketplace. And those meter manufacturers were connected with all of them in some form in some different parts of the world. Next slide, please. Now, I'll just hand you over to Heather, who will take you through some of the numbers, the latest numbers.
Hi, everybody, and thanks for joining, and thanks for showing the interest in CyanConnode. So I'm just going to talk about giving an update on the numbers for the results that we announced just last month for the financial year ended 31st of March this year. You can see from this, and you can see from the graph as well, how the company is growing. Revenue increased up to 9.6 million from 6.4 the year before. And if you consider that the previous year before that was 2.5, you can see how this has been growing substantially year on year. This was all driven by a record number of modules that were shipped. Many of you who know our technology and our business model will know that we sell modules, gateways, services, head-end software, and support and maintenance. So the initial part of a contract, once we roll out a contract, the contracts run over typically anything up to 10 years. And the initial phase will be us shipping the modules so that the modules can go out into the field. Well, first of all, they get integrated into the meters, and then they get installed out in the field. So the initial part is the modules, and we shipped 612,000 versus 481,000 the year before. 62% reduction in operating loss to 1 million compared to 2.7 million operating loss the previous year. And once again, you know, on the graph, this is showing how we're moving towards profitability. And in fact, actually, our adjusted EBITDA was positive by 100,000 for the financial year versus a loss of 1.9 million the previous year. Cash and cash equivalents increased to 2.4 million at the end of the financial year. So next slide, please. This slide just shows the graph of the modules and how it sort of ramped up in the second half of the year. The first half of the year, if you remember that this is 2021, so from April to July 2021, in particular, India was hit really badly with the second wave of COVID and was in a really sort of severe lockdown. So that's why shipping was quite low, and then it took up the second half of the year. So next slide, please. And then talking about post-period end, just some key things that have happened since the end of the year. If I sort of summarize, to the 31st of March this year, from all the time that we've been working in India, in other words, you know, we started about 10 years ago working in India, and in all the time from then until the end of March this year, we'd won 1.3 million units. And since the end of March, we've won a further 1.3 million. So you can see once again how things are ramping up. The tenders that we're seeing, as John mentioned earlier, the tenders that we're seeing at the moment are tenders in the millions, whereas a year ago, they were in the hundreds of thousands, and prior to that, they were sort of tens of thousands. So you can really see how the market is starting to take off. So there was a 1 million unit order from Genus, and then 2 orders from IntelliSmart, totaling up 300,000 modules. Interesting thing about the one from Genus, with this one, because they're a meter manufacturer for this particular contract, we've agreed that they would actually also manufacture our modules. So it's quite a good model for us from a working capital point of view, because they will buy the components, they'll put everything into manufacture, they sell to us, and then we sell on to another division of Genus. And obviously the cash flow sort of just passes through from one part through us to the other. We've also, since the end of the period, we've won 2 orders in Middle East, North Africa region, and those are worth just over $9 million. And good thing from a working capital point of view with those ones is that we receive cash all paid up front before we actually ship anything. So 50% when they sort of call off a number of items to be delivered, and the remaining 50% before we actually ship. Since the end of March, and this goes to the end of August, we'd received 3.7 million cash from customers, and we are integrating with a number of, with 9 extra meter manufacturers. So this gives us additional routes to market as the market grows, and the Indian government obviously wants many more manufacturers to de-risk, and that's why it's good for us to be integrated with as many as possible. We've had a change in the business models, which is a requirement from the standard bidding document for the AMI SPs using the DB foot model. And with that, there will be an element, usually about 60% of the contract will be CapEx as we install, and then the remaining 40% will be equal monthly installments spread over anything up to sort of 8 years. And as I say, that in the last point, you can see that, so it's sort of 60%, and then we spread the remaining 40%. So next slide, please. And I'll hand back to John.
Yeah, sorry about that. Just having finger trouble. I think just for time wise, I've talked about the first part of this, where we're doing 41 million tenders. Next year, we're expecting 109 million. So 150 million smart meters are out there for right now out of the 250 million that will be tendered for in the next 18 months, which is fabulous. And what are the government doing about the encouragement here? They're encouraging the government outlay of over 30 billion pounds sterling to roll out smart metering. Of that, they're actually rolling out for grant money 10 billion pounds sterling, which is given to each utility between 15 and 22% of each project to help fund the rollout of smart metering. The reason that they're doing all of this is to make the discoms profitable, because what they want to do in the long term is move from analog network to a digital network, make them profitable, and then what they want to do is privatize those discoms as we have done in the UK. Next slide, please. This just gives you an idea of across the width and breadth of India, where we've deployed to date the 1 million units across India. The next one, please. And this just shows what else I've already said, that other parts of the world that we're operating in. We've been operating in Thailand for some time, and that's going really well, and we're expecting some good future orders coming out of there, as well as UAE, both Dubai and Abu Dhabi, and also looking at other opportunities, not just electricity metering. Next slide. Well, thank you very much for listening. Now I hand you back to Hardman.
I think Richard is keeping.
I'm here. Sorry, I'm here. Sorry, I just clicked on the wrong link. Can you see me now?
Yep, that's fine, Richard. Off you go.
Right. Okay, so I'm going to start with the longest question first. Apart from what we've just been talking about, there have been other global successes for CyanConnode solutions over the past few years. Can you comment on any other product solution areas such as smart gas, smart water, smart street lighting, and EV opportunities that may be of interest to investors and potentially available for solutions in the future?
Yeah, sure. So, we do have, opportunities that we're looking at, as I mentioned, funny enough, on the last slide there. We are looking at, water metering, for instance. We've also got opportunities, and actually, part of the deal in the UAE, well, I should say Abu Dhabi in particular, is hooking up existing meters that are electricity and actually water. So we're already doing some of those other opportunities. But as I mentioned, Richard, the real opportunity right now is on electricity metering, and that's why we're very focused within India.
Okay, so the next question is, given the competitive nature of the Indian market you've described, how do you forecast your activity in the area given those competitive pressures? How confident are you that you will reach your internal targets?
Yeah, so I mean, to be honest, we always like to sort of, if you look at our numbers in the last 3 years, we've actually overachieved our actually numbers to the marketplace, which has been great. And the difficulty is, because of the speed now this is happening, so for us to say, you know, out of the 41 million, pinpointing how many will come to CyanConnode for pure RF mesh, you know, it is a difficult science. Why we'd like to say that the numbers that we've seen the analysts put out, not us, but the analysts have put out, are probably cautious, but that's a good thing, because we don't want to put numbers out that we miss. I mean, we want to make sure we can hit the numbers. And, you know, we do see, well, which is encouraging, you know, we do see other competitors coming in particular, the actual people that are our customers. As I mentioned, EPC, engineering, procurement, construction companies are out there in the marketplace, you know, and they're there because they know they can run 8 to 10 year contracts and fund them.
Right, so the next question relates to your financial situation and the strength of your balance sheet to enable you to reach these growth objectives. Could you explain how you are going to do this? So can you start with the balance sheet and then tell us how the company will grow?
Well, I think that a couple of key things that I mentioned on, you know, when I was talking through the financials, is that with this largest order, which is our largest order to date, the 1 for 1 million units from Genus, just by using them as our manufacturer as well as our customer will help working capital. And from the UAE, those contracts, we're getting the cash in advance. So those are some of the key things that we're doing to get us through this sort of stage as we grow. And I think also the fact that we have the 60%, which is CapEx, and the CapEx comes in as we ship modules, and we use letters of credit for that. And we get the letters of credit discounted, so we receive the cash for that within, you know, maximum 30 days when we ship the hardware. So all of these are things that we've done to help with managing the cash flows, and we'll continue to do that. And obviously, you know, we'll watch things as we continue to grow, depending on how many units we actually win. As John said, it's a difficult science sort of predicting how many we're going to win. And the other difficult thing is obviously predicting the timing of when these things will come through. But at this stage, the model that we've been working on and using seems to be working, so we'll continue to use that.
Thank you. So the next question is, the Middle East is fast becoming a significant source of revenue for the company. How do you think, what do you think about the evolution of the geographic revenue mix over the next 5 to 10 years? So if you can look a little bit further forward, how do you think the company will balance its opportunities between now and 2027, 28?
Well, I think if you consider the size of the Indian market on its own, and if we look at, for example, last year, India probably made up about close to 90% of the revenue. This year, it's going to be a slightly different mix. But because of the size of the Indian market and the sort of speed of these tenders that are coming through, I would expect India still to be the largest share of our revenue over the, you know, not just the next 2 to 3 years. I would think sort of continuing until the 250 million really are rolled out. I mean, we are, as John said, you know, we're in the UAE, we are in Thailand as well. But if I look at the size of the Indian opportunity and the size of the tenders coming through on that at the moment, I think that we're still going to see that India is going to be the largest part of the business.
Okay, thank you. So the next question is there a natural life cycle to the meter program? In other words, are the meters going to be obsoleted and replaced, or how many years will they basically last for once they're in place? Is this a repeat market? I think that's the question, or is it a one-off market? Once you've done it, you move to another area.
Sure. So if you think of, of the UK meters, those meters were around for about 30 years, made of metal, and you remember the old dial that whirl around. Well, these days, like everything, in the world, they're made of plastic, and to be honest, the people in the industry are saying that it's probably about a 15-year cycle for those meters to last in terms of ensuring that they are accurate and sending out the correct meter reading, and therefore the physical meter will need replacing. Now, remember, what we've got is ongoing support and maintenance. Heather mentioned 40% month on month, equal monthly installments for 8 to 10 years. Well, actually, it doesn't stop then, because if they stop, that meter goes back from a smart meter to a dumb meter. So why put all that investment in? So what will happen? They'll come back to us and renegotiate for the next 10 years. I mean, ironically, in the UK, we've got a 15-year contract, which is great for the support and maintenance. And, when we look at, for instance, Tata Power had a 5-year contract. What happened? They came to us last year and renegotiated another 5. So we'll just see, Richard, a continuation of the ongoing revenue stream. And then, of course, remember, when we just sell into a utility, we might be selling 1 million units now into a utility. That utility may have 20 million meters. So they'll come out again with another tender, and it's going to take a long time. Let's face it, 250 million. I know they're saying 5 years, but that's a lot of meters to go at.
Absolutely. So the next question relates to, I think, a common issue in the world at the moment, in the electronics world, is supply chain issues. Are there any supply chain issues in components in order to allow you to meet your production goals?
I think these supply chain issues and delays have been going on since about 2020, which actually is the time that we started ramping up in our supplies, towards the back end of about October 2020. And lead times grew longer and longer. And we've got a very good relationship with our main provider, the provider of silicon. And we've got an arrangement with them where we've got to sort of give forecasts for 12 months in advance, because their lead times are 12 months, but they do allow a little bit of flexibility in that. So we obviously look at that and we plan, what's the maximum that we think we're going to use, because they allow us that flexibility. And in the sort of month or two before before they're due to ship it, we can potentially shift it out if we think that we won't need it straight away. So we do have that flexibility. We've even managed to negotiate a good, price reduction on that as well, due to our relationship with them. Some of the other, there have been some tricky parts over the years, but we've been managing where, in certain cases, if we can't get it from one supplier, that silicon is the key component that we can only really get from one supplier. So that's why we've been so specific about how we manage it. Some of the other components aren't necessarily only available from one supplier. So, what might have happened is we might have, to be able to get something, if we haven't got it through the regular supplier, we might have had to go somewhere else. Sometimes we might have had to pay a bit more, but generally we've managed to do that. And as you can see, we've managed to deliver. So, once again, I think we're managing those relationships well.
Thank you. So we're going to go to a poll in a couple of minutes or so, and I'll talk a little bit more about that when we get there. But in the interim, if anybody has any last minute questions, please submit them. We've had one other question from an investor who says, what are the key metrics I should be looking for in deciding how to value the business? Well, maybe you would like to answer that from your point of view, about how you look at the financial metrics in order to decide how to grow the business.
Yeah, thanks, Richard. Good question. And we have analysts who look at our market, and I would look at the firstly, I would look at the value today of the market cap of the company. Use discounted cash flows as a particular way of value in a company. But I think in our case, people have got to look really of where we are. The investment that we've done of $50 million on the product for India and for the rest of the world, but mainly for India. You know, you look at our positioning, you know, we've got 60 people in India that's all local. And, you know, we have got excellent companies that we go through, like Schneider that I mentioned, Adani, Reliance, etc. Why are they all buying from us? And I think if you look at going forward, and it's actually trying to give a value for the going forward opportunity, as I mentioned, you know, 150 million meters to go at in the next 18 months. You know, you can't say to me that we're not going to win any of those. You know, we would expect to win a good portion of those. And I think that gives us the value in terms of where we are with revenue and EBITDA and the multiplier that we get. And these are long-term contracts. So these are EMIs, reoccurring revenue streams, that will go on for 8, 10, 20 years, etc. once the whole thing is installed, which is going to take some time anyway to install all of those. You know, you're probably talking about 8 years to install 250 million, to be honest. And then there's all the rolling out. So, you know, I'll leave it to the experts about the valuation, but I know certainly that I'm not that happy where it is personally, but that's where it is.
Well, John and Heather, thank you very much indeed for a fantastic presentation.